What if I told you that a school teacher, a pizza delivery driver, a college dropout, and a single mother all became millionaires from crypto? This isn't just a story of luck or timing, it is a fundamental shift in how wealth is created in the digital age. Most people see the final number, the millions of dollars in a wallet, but today we are going to look at the years of silence, the months of doubt, and the incredible discipline that came before it. These people weren't geniuses with inside information. They didn't have massive capital to start with. They shared three simple traits. They were early, they understood the underlying technology, and they had the unbreakable discipline to hold through the chaos of 80% crashes. They understood that the world was moving toward decentralization, and they positioned themselves before the rest of the world caught on. Today, we are deconstructing the exact journeys of 5 ordinary people who made extraordinary fortunes. We will look at the white papers that convinced them, the exact prices they paid, and the psychological warfare they faced when everyone told them they were crazy. This is a blueprint for the patient investor in a world of high-speed distractions. If you've ever felt like you're too late, this video is for you. Story 1. The Ethereum Believer. In 2014, the crypto world was almost entirely focused on Bitcoin as a digital currency, a way to replace cash. But a 19-year-old computer science student in the US was looking for something more, a programmable blockchain that could act as a global computer. He found it in a dense, technical document that most people ignored because it didn't look like money. It looked like infrastructure. He read Vitalik Buterin's white paper and saw a future where smart contracts could eliminate the middleman in every industry, from finance to real estate. He didn't just see a coin, he saw a platform. He realized that if developers built on top of Ethereum, the value of the underlying network would become astronomical. He wasn't buying a token, he was buying into a new ecosystem for the entire internet. He didn't have much. He combined his savings from tutoring and a summer job totaling exactly $1,200. He participated in the Ethereum initial crowdfunding sale in the summer of 2014. The price? Just 31 cents per ETH. He walked away with 3,870 tokens. At the time, there were no apps, no DeFi, and no guarantee it would ever even launch. It was a leap of faith based on pure technical conviction. Then came the years of waiting. 2015 was brutal. Technical delays pushed the launch back, and when it finally went live, the price dipped below his entry point. His parents begged him to sell and be sensible. His friends joked that his $1,200 was now worth a single used car tire, but he stayed grounded in the tech, following every developer update on GitHub while the rest of the world ignored it. He saw the DEO hack of 2016 and the subsequent hard fork that split the community. While others panicked and sold at the bottom, he understood that the core value proposition of a programmable blockchain remained unchanged. He knew that early-stage technology is always messy, but he believed the long-term vision was worth the short-term volatility. He stopped looking at the price and started looking at the developer growth. Fast forward to 2021, Ethereum became the backbone of the DeFi and NFT explosions. The price didn't just recover, it soared to an all-time high of over $4,800. Those 3,870 tokens, they reached a peak value of over $18 million. He didn't hold to the absolute peak, nor did he sell everything at once. He sold in tranches as his life goals were met, proving that patience pays in multiples. Story 2. The Single Mother and Shiba Inu. This story is often dismissed as pure luck, but it reveals a crucial crypto truth. Understanding community sentiment is just as important as understanding code. In mid-2020, a mother of 2 in Atlanta was working 2 jobs and looking for a way out of the grind. She was familiar with Dogecoin and saw how a passionate community could drive value through collective belief. On a Reddit forum, she found Shiba Inu, a token with a massive supply and a Dogecoin killer ambition. She spent weeks reading the Woof paper and following the community's growth on Telegram. She wasn't just gambling, she was identifying a trend in retail investor psychology. She realized that low unit price coins had a psychological advantage for new investors who wanted to own millions of something. She took a calculated risk. She invested $5,000, money she'd saved for a rainy day over several years of hard work. At the time, Shiba was trading at a fraction of a cent. Her $5,000 bought trillions of tokens. It was a bet on the power of internet attention and community culture, and for months, absolutely nothing happened. The price stayed flat, but she didn't waver. Then, the meme coin mania of 2021 hit. SHIB was listed on major exchanges like Coinbase and Binance. The community exploded into a global phenomenon. By October, it had grown by over 40 million% since its launch. Her screen showed a balance of over $2 million. She sat in her car and cried, realizing she would never have to work 2 jobs ever again. Her life changed in a single quarter. She was disciplined enough to exit. She sold as the price entered a parabolic phase, ignoring the calls from moon boys to hold for 1 cent. She paid off her debt, bought her first home, and secured her children's education in full. A speculative bet, managed with professional exit discipline. She proved that even meme coins can be part of a wealth strategy if you have a clear plan for when to leave. Story 3. The 10-Year Hodler. This is the ultimate story of patience. In 2011, Bitcoin was a fringe experiment. Most people had never heard of it, and those who had thought it was just magic internet money for criminals. But one software developer, disillusioned by the 2008 banking collapse, saw it as a life raft for his savings. He saw a system that couldn't be manipulated by banks. He sold his reliable sedan for $9,000, almost everything he had in liquid assets. At $15 per Bitcoin, he acquired 600 BTC. He wasn't looking for a quick flip, he was looking for an alternative to central banking. He understood the math. A fixed supply of 21 million coins meant that if global demand rose even slightly, the price had no ceiling. He was betting on the scarcity of digital gold. He then did the hardest thing in investing: nothing. He watched Bitcoin go from $15 to $1,000, then crash back to $200. He saw the Mt. Gox exchange, the biggest at the time, collapse and lose millions of users' funds. He didn't blink because his coins weren't on an exchange. He had secured his private keys on a hardware wallet and stored them in a safe place, far away from the internet. He detached his emotions from the daily price action. He didn't check the charts every hour or even every month. He held through the 2017 boom to $20,000 and the 2018 crash back to $3,000. For 10 years, he lived a normal life, working his job and taking the bus, knowing that his future was already secured. He was a millionaire in waiting, living a completely ordinary life. In late 2021, with Bitcoin over $60,000, he finally began to sell. He didn't sell at all, just enough to never have to work again. His $9,000 car sale had become $36 million. He remains anonymous today, proving that in crypto, your greatest asset isn't your capital, it's your time horizon and your security practices. He won the game by refusing to play the short-term market. Story 4. The Speed Trader. Solana launched its mainnet in early 2020, right at the start of the global pandemic. It claimed to solve the blockchain trilemma, achieving decentralization, security, and scalability simultaneously. Its core innovation, proof of history, offered speeds that could rival the Nasdaq. Most investors were skeptical, but one trader in London was paying very close attention to the engineering. A 26-year-old trader spent weeks in Discord servers and developer chats, asking hard questions and reading the source code. He realized that the engineering team behind Solana, coming from backgrounds like Qualcomm and Intel, had built something fundamentally different from Ethereum. It wasn't just a copy, it was high-performance infrastructure built for the future of finance and high-frequency trading. He invested $15,000 when SOL was trading around $1. He saw it as the Google of blockchains, built for scale and speed. As the DeFi ecosystem began to migrate to Solana for its sub-cent transaction fees, he knew his thesis was playing out in real time. He didn't let the early technical outages shake his belief in the long-term architecture. He knew that pioneers always face headwinds. The 2021 bull run took Solana from obscurity to a top 5 global asset. It peaked at $260. His $15,000 investment hit a valuation of nearly $4 million at the top. He sold progressively, using the funds to start his own consulting firm and travel the world, proving that deep technical research is the ultimate competitive advantage. He bought the team, not just the token. Story 5. The Academic Investor. Our final story features a 16-year-old in Singapore who treated crypto like a science project rather than a casino. While his peers were spending their savings on gaming, he was studying the Cardano protocol and its peer-reviewed roadmap. He was fascinated by the formal methods and the rigor of the development process. He saw it as the most secure way to build a global network. He was impressed by Charles Hoskinson's vision of a more sustainable and secure blockchain for the developing world. He convinced his parents to let him invest his entire $2,200 in savings. He bought ADA at just 2 cents. To him, the slow, methodical development wasn't a flaw. It was a sign of quality and security that would eventually win. He was playing a different game than the day traders. In 2021, Cardano's major upgrades brought smart contracts and staking to the network. The price hit $3.10. His $2,200 grew to over $340,000. He used the funds to pay for his entire university education in cash, with plenty left over to keep building his portfolio. He proved that you're never too young to understand the future of finance if you are willing to do the reading. But there is a hidden side to these stories. For every millionaire, there are thousands who lost money because they didn't manage their risk. These 5 winners didn't just buy, they managed their position sizing. They didn't invest money they couldn't afford to lose, which is why they were able to hold when the market crashed. Most fail because they are searching for a shortcut, not a technology. So, how do you spot the next wave? You look for utility that is currently undervalued. You look for teams that are building through the bear market. You look for sectors like AI-integrated blockchains, decentralized physical infrastructure, or Layer 2 scaling solutions. You don't look for the hype. You look for the problems that are being solved by code. The formula hasn't changed since 2011. Research, conviction, and a long-time horizon. The next story is being written today. 5 people from 5 different walks of life. One common formula: research, preparation, and conviction. They weren't early by accident. They were early because they were looking where others weren't. The next decade of crypto success stories is being written right now in the bear markets of today. The question is, are you doing the work required to be one of them when the next bull run arrives? If these stories inspired you today, join us here at Predictor. We do the deep research and follow the trends so you don't have to start from zero. Hit subscribe, hit like, and tell us in the comments which coin you think will be the next Ethereum or Bitcoin. Your engagement helps us keep this channel alive. I'll see you in the next one. Stay patient, stay disciplined, and stay early. Disclaimer: this video is for educational purposes only. Investing in cryptocurrency involves significant risk. Past performance is not indicative of future results. There are no guarantees in the market. Consult with a qualified financial professional before making any investment decisions. Stay safe, stay informed, and never invest more than you can afford to lose.